We'll start off by explaining that there's two schools of thought. There's fundamental versus technical. Fundamental analysis versus technical analysis. Now, most people that you see on TV and on financial shows, et cetera, they're fundamental analysts. You know, we've talked about this in prior sessions. You know, earnings, companies, balance sheets, cash flow, all that sort of thing. They go on and on and on and on and on about it. And that's, I'd say 98% of the people you hear about, or pundits or stock consultant types, are in that camp. Then there's the technicians, the technical analysis, which is the study of charts. So basically, fundamental analysis is the study of companies. Technical analysis is the study of charts. It's really that simple, even though that's kind of general. Now, here's the deal. Over the years, the fundamentalists have been at odds with the technicians for the most part. There's a lot of fundamentalists out there that think technical analysis is hocus pocus and is fortune telling or reading tea leaves. All right, now the thing is, though, the reason why technical analysis is superior, in my opinion, is because, believe it or not, all fundamental analysis falls into that camp. And you're thinking, what? Well, here's why. Because everything there is to know about a company, all knowledge that can affect a stock, is already in the chart. This is the one thing that I'm going to keep hammering home as this academy goes on. And there's why. Because every trader, every investor, everyone involved in the stock market is feeding the action on that chart. Okay, and in fact, in the entire world, the action of the chart is being fed by everyone's input. Everyone's buying and selling. So in other words, the composite opinion of all people involved, all knowledge, is somehow makes its way to that chart. That includes all the fundamentalists, you see. And that's why fundamentalism in stocks is in the same camp as technical analysis in reality, whereas if you're only doing fundamental analysis, you generally ignore the technical side, and so you only have half the equation. So the truth about technical analysis is that there isn't anything known about a company that is not reflected in the charts. What's interesting to point out is even insider information would be reflected in the chart, right? Because the insiders cannot hide their tracks. That's going to show up one way or the other in the chart, in the volume, if nothing else. There's nothing you could learn about a company that isn't already known by thousands of people, and that's the other issue. You know, whenever I hear or see discussions on companies, I'm thinking, what advantage is that going to give you to study, let's say, their earnings of a corporation? What advantage could that give you? Because whatever you discover, even after hours and hours, even days of study, is going to be known by 100,000 people by the time you even read about it. So you get no edge. The charts are the only accurate source of info, and it's all you should consider. Now, the one problem with this, especially for new people, it's like a airline pilot flying blind. You know, it's like they say that a good pilot can do a precision landing with just his instruments. He doesn't need to see anything. And that's kind of what it feels like if you've come from the old school of fundamental analysis, you know, earnings, valuation, that sort of thing. It's going to be difficult to ignore that stuff and just look at a chart. It's like flying the plane blind. But after you get used to it, you'll realize that the chart gives you way more information than you could ever learn by studying the fundamentals.